Good morning and welcome back to the Breakfast Show 2. I'm here with Derieck Hodges and we're talking about tax season and how to be prepared for the 2022 tax season. We're on our second interview out of our 5-part interview, and we're here to talk about a little bit of the different things that are going on. I know some COVID era tax enhancements are gone. Talk a little bit about that.
Yeah, you know, doing our taxes isn't super fun. And then to get a surprise when you get the final results, even less fun.
Yes.
And we better prepare ourselves that there's a chance, if you're typically used to getting a tax refund, there's a chance you might get less of a refund. And the real kind of basis for that is, at the end of 2021, some of those COVID relief things for like child dependent care and the child tax credits, those have gone down to much lower levels. They're still very robust, but much lower than the COVID era. And then also there is a front of the tax return deduction for charitable giving. That's now gone as well. And so both of those things combined will likely result in a lower refund for people who are used to getting fairly large ones.
And so then I guess that's something that we all just need to take in mind, that if we do see less money coming back to us, we shouldn't be frightened by it. It's definitely just some changes that are going on with the tax season. And then also I know that there are changes and different things that are happening with certain people using Venmo, Cash App, Zelle, those type of things. There's different tax, I guess, forms that we have to work with that. What is all that about?
Yeah, so if you do enough transactions and enough dollar amounts on those kind of platforms, you should expect to get a 1099-K. Now, I believe it's a fairly large amount, something around 200 transactions in a year's time and in excess of $20,000 of financial transactions. But what I would just encourage everyone to do is just be aware that those things are now being observed by the IRS. Just keep inventory, and then that's where it's probably a good idea to talk to a tax advisor and say, is this going to be a tax issue for me or not?
And I guess it's safe to say that it's not rare to see different changes going on within taxes, and this is something that probably happens every year, that things change and people tend to get a smaller refund or maybe even a larger tax bill. That's probably fair to say?
Yeah, and you know, it's funny, I tend to think a big refund's not always a great thing because we've given the government a free loan throughout the year. That said, some people say that's my best way to budget for my vacation and have money. Listen, that's where behavioral finance is tricky, and we all kind of respond to money differently. And so if that works for you, that's fine. I just think, kind of thinking ahead now to 2023 taxes, what we might want to do is, after we get our 2022 returns and outcome, we might want to sit down and look at our withholdings from our wages and start to think, do I need to adjust them so I return back to kind of what I expect to normally get?
And I could assume that that would be very beneficial and very helpful. You know, looking ahead, there's never anything wrong with figuring out, I guess, the future a little bit.
I think one of the best things that we can do with tax planning is think much longer term. I love the vision of, we're not just thinking about the next year or two, but we're really kind of casting our eyes out even a decade or so in the future and trying to anticipate where our income could be and how the tax code and any possible changes might impact me. And so one of the big things I love is the idea of having tax diversification, different tools to combat what likely will be an ever-changing tax code.
And then if people are doing their taxes or they get their taxes done and they notice something different from the previous year, I guess your best advice would just be to talk to a tax advisor about that so you can better understand it.
Absolutely. And normally you would say, okay, call the IRS, but the reality is the IRS phone lines are really, really busy. They didn't answer a lot of the calls, and unfortunately they didn't give great advice most of the time. I mean, the statistics aren't really great, and they're just overtaxed right now. And so I think that's where your local tax advisor is going to be a better resource for you.
All right, Derrick, well, that was such helpful tips and advice for this interview. We have another interview coming up tomorrow, so be sure to stay with us. We'll be right back.